freaking idiots. No one wants to buy when the market's down. Today, folks, I gotta break down for you why you need to be excessively bullish on this so-called market crash, as everyone from the top of the hill is, it's overvalued, and Michael Burry shorting everything, yet there's no geopolitical black swan war-based event that's just restriking up. We're not talking about some crazy inflationary pressure when the government was printing helicopter money. We gotta talk about the trigger that's gonna send the market into all-time highs, in my opinion, when that might even happen, because there is some real cool underlying data, because most stocks are undervalued. There's crazy dividend payers that are trading at discounted areas that no one cares about, and everyone just keeps looking at the S&P like it's this crazy expensive thing when it's tech companies that drove it there. And even tech companies aren't that crazy expensive considering they're growing again. Meta is never going to $90 a share again. I'm sorry. This dip is going to be a huge buying opportunity. I've got some emergency fund money. I got some money beyond the emergency fund, and I'm going to be investing it, baby. I don't know whether I'll put it in the S&P, whether I'll buy some Canadian dividend pairs. I don't know. Consider subscribing, because I am like a squirrel without his nut right now. I got some ADHD going on, and this is getting me very excited. So welcome to my rant today. Consider hitting that like button, because we're also going to talk about some of the most shorted stocks on the market. But firstly, in the watch list, the S&P 500 just fighting to maintain some green. My bank stocks here, guys, they've been getting hit. I'm only up on TD and National Bank now. I'll do some portfolio updates maybe sometime early next week. SCHD, the Dow's doing pretty good today, but this has become a risk-off environment. As things triggered into a sell-off, you get stop loss triggers, baby, and that leads to further downside on these higher speculative investments where people put some, emergency assets aside when it comes to those stop losses. And even Palantir and a lot of things that got hit heavily this week are going back up. PayPal's going back up, Northland Power, some of these stocks that I've been following. But nonetheless, taking a look at why this is happening, the Fed officials in their minutes basically said there's upside risks to inflation, which is so stupid. The Fed raising rates at this point, they're ignorant, they're dumb, it doesn't make sense. They were the one that caused inflation with helicopter money. Ain't no one buying NFTs and Pokemon cards anymore here, folks. The only thing going up in inflation is housing, because you raised the interest rate. When interest rates go up, now these people that want to get a mortgage cost more. Now the guy that's buying it as a rental unit, rents it out to someone, he's got to charge them more. And that's primarily one of the main causes of inflation at this point. Mostly anything driven from inflation now is the double-edged sword of by them causing it with interest rates. At 3.2%, this little hiccup, who cares? We've come down so freaking much. And yeah, I know gas, some commodities are up a bit, but they're not like up where they were. Like lumber was like, one of the best bets you could have ever made in the market. It just doesn't make any sense past this point. It's just going to be a slow grind as the labor market remains tight. But because the labor market's good, that doesn't mean you should put pressure on it, Mr. Jerome Powell or Tiff Macklin here at the Canadian banks. I mean, it's so ridiculous at this point. They just need to nominalize, take a breath back, sit into the end of the year. Let's see where we end up, because we're not going to be flying back to 6 to 8% inflation numbers. So why would you jack interest rates any higher? The S&P, it's crashing miserably. Michael Burry is shorting it. I mean, you take a look at it, it's trading down, 4.62%. Ooh, man, the PE ratio is sitting at 24.9. The fact of the matter is that the vast majority of stocks in the S&P are trading at multiples they haven't seen in a very long time, like 5-10-year low multiples against their earnings per share, whereas a few handful of tech companies, heaven forbid Nvidia drops on its earnings, it's not going to bring the whole market down with it. One of my bull theses is if the bottom market starts to pressure up because people recognize the value is there and tech comes down a little bit, it'll cushion itself out and maybe even potentially push us to all-time highs. But where the real money is sitting at that's going to get us there is in money market funds. In a higher interest rate environment, people understand high interest savings accounts pay a lot more. Money market funds, heck, if people are putting it into GICs and bonds, that's where they're going to go out of fear. And we're seeing record levels of money market funds. This is primarily just cash sitting around $6 trillion. If this ever found, even if a quarter of this ever found its way in the market, we'd easily be at an all-time high right now. But there's too much fear. People don't know what's going on. The market becomes irrational to the up and to the downside. And the biggest joke going right now is Michael Burry shorting the market. I mean, this is the most speculative, gamblist thing any idiot could possibly do. The guy doesn't know any more than you or I do. And I guarantee you watch on the next quarterly filings, he's already out. He got some put options, the volatility hit. This guy runs with his tail between his legs every time he makes a prediction. Look at Tesla. He shorted that thing back in 2021, made a big headline about it. Tesla went down a bit. He was out within like a few weeks of doing it. And even Kevin O'Leary has been kind of poking fun at him, saying it's kind of ridiculous considering you're basically betting on every single sector of the market completely tanking. even if tech tanks, I just don't think it's enough to bring the market down to those substantial levels, because it's not 2022 anymore, folks. We're not seeing negative revenue growth rates like we were with every tech company because people were too scared to spend money on marketing like they were with Facebook and Google. Facebook's never going to $90 a share again. Tesla's never going back down to $100 a share again. I just do not see it happening because, again, things are actually growing. So this is just a stupid thing that he is doing with most of his stocks that he's holding, because he is long the market. I mean, you see it in his portfolio, right? Like, he's got a lot of individual companies, and a lot of them are getting devastated right now. I mean, look at CVS. This one just tanked on recent news, so at least he's making money in some of his short bets. But one of my favorite stocks is being shorted right now. I haven't had the cojones to buy this, but look at Medical Properties Trust. This is probably one of the most deepest discounted REITs I've ever seen in my entire life. And it just keeps going down, and it is short interest in this is hitting 30%. It's down 73%. It's back to where it pretty much was during the 2008 financial crisis. Yet, as far as I can tell, they have the stability, they've got the guidance projections, and they're just doing a few things to help out some of their subsidiaries that are within their portfolio. I mean, we can see Medical Property Trust sells $105 million of its interest in Stewards. They are mitigating some of the risk in their portfolio, but they have the liquidity, the cash to do it. Can they sustain this dividend of 18% today? I don't know. Honestly, from far as I can tell, they have room to pay the dividend. It makes sense they can pay it. The question is, are they going to pay it at this high premium? I wouldn't be surprised, because typically when this happens, you do see dividend cuts, but my God, 18%. If they never cut the dividend and you bought it here and this thing was able to get a short squeeze out of it, your return would be absolutely bonkers. It would be ridiculous. I don't know what's going on here, and I want to know what you think about it in that comment section below. A lot of REITs, anything that's infrastructure heavy, and I want to talk about what's going to drive the next bull market, because it's going to have a lot to do with these interest rates and these money market funds when fear alleviates. But I'm looking at all these infrastructure heavy companies, right? I mean, you're talking about American Towers. I can name so many like utility based companies out there that I'm following, like Southern Company, that hasn't been hit as hard, but these companies that have so much debt that it's dragging down their cash flows, right? Because they're paying it out from their EPS. That free cash flow has to go to some of these debt mitigation payments. They don't need to cut their dividends. A lot of them are trading at really favorable values right now because of that cash flow deterioration, but inevitably it will happen. I promise you, they're gonna cut rates. The day they cut interest rates, stocks like this that the market is somehow just giving up on, letting them tank to like below, at discounted levels, honestly. I mean, these are value plays at this point, and this is an $80 billion company. This is the first time in a decade I think American Towers has been trading actually at a very reasonable valuation. PayPal, another example, but PayPal not is debt, focused. It's not as inflicted by the interest rate environment. But these kind of stocks, guys, as soon as interest rates, they're like, oh, we're going to start cutting them. Watch what happens. Watch these money market funds. Watch what people start doing with their cash, because eventually they're going to give up on their GICs and their bonds. Unless GICs and interest goes high enough to get back to like 6 to 8% returns, that's when everyone really gives up on the market, because why take any risk at all when you can get damn near 6 to 8%? Most people are buying stupid like option ETFs that over long periods of time don't even yield 8% returns. Yet if you can get it out of a GIC and guarantee that stuff, that's where everyone's money's going to go, and that's where a lot of money is right now. But I promise you, you watch, mark this video, come back to this on the day, folks, when they cut interest rates, and I can't predict when that's going to happen. I'm really hoping, and I wouldn't be surprised if it's sometime by next summer, that's going to perpetuate us into some crazy market returns, presuming there's no other black swan event or something that comes out of the side blinders. But again, typically market crashes only happen once every 10 years, and we've been getting a lot of volatility since the pandemic hit, right? So eventually, I'm hoping, I'm praying things nominalize, but take advantage of this opportunity. Take advantage of some value if you see it out there. This is the moment where you get rich. This is where you wake up 10, 20 years from now and you're like, hey, you know that little blimp on the radar that happened in 22? That gave me like 100% returns in a much shorter period of time. Don't chase the market when everyone is chasing the market, you freaking idiots. No one wants to buy when the market's down. It's so psychologically counterintuitive. It's so hard for people to imagine that, hey, when things are dropping, maybe that's the time to buy. Go back to my October videos of last year. I said, this is the time to buy. I put $10,000 plus just within that month of the bottoming of October in the S&P. And God, that money went into me buying real estate, baby. That's how you perpetuate the future of your retirement and get rich. People are dumb, and this is what you do. When Michael Burry says short, you buy. When any idiot tells you not to be long the market, you freaking buy. Bulls will always win. Say it with me. Bulls will always win. I'll see you in the next one.